Welcome to the Capital Spreads Weekly Update. Today is Thursday, the 3rd of February 2011. And so far the week has been relatively strong for equities, considering the end of last week ended a little bit negatively. There was unrest in Egypt, and that has really continued through into this week, with a big spike in oil prices last Friday caused equity markets to tail off, and we saw quite a bit of profit taking from what had been an exceptionally strong rally up until now, certainly when you consider the strength of the Dow, the strength of the DAX. The FTSE itself has looked a little toppy for a few weeks now, but so far this week we've bounced off some support levels. In particular, the FTSE 5800 proved another buying opportunity for bulls, and so we've done quite well considering the unrest that is continuing in the Middle East and higher oil prices that have been going higher. But from the economic data front, we've actually seen some good numbers from the UK. We've seen very strong manufacturing PMI numbers, and today we saw some very strong service numbers. So there's a degree of optimism just returning to investors, in particular when you look at last week's dismal GDP numbers, that those PMI numbers this week point to the negative growth that was shown last week for Q4 could be temporary. So we will hopefully rebound growth-wise in Q1 of 2011. Yet we'll have to wait and see that data in a few months' time. And then lastly, today we saw the European Central Bank keep rates unchanged, and again they're focused very much on inflation. Inflation becoming quite a key theme now as it's getting high across both Europe, in the UK and in America. So central banks just slightly starting to become a little bit more hawkish towards inflation. So the current situation is that the FTSE is just below 6,000. Around 59.70 at the moment. The Dow back above 12,000, again recording 2.5-year highs, bouncing well from the end of last week, that correction at the end of last week. It's around 12,020. On the currencies, euro dollar has been above 138.00, but just seeing a little bit of weakness today, so around 137.20. Cable again seeing some good strength on the back of some dollar weakness, but around 162.00 at the moment. And gold that's also suffered a bit of a retracement, but has bounced off just above the 1300 level and has done well to recover, but again failing to get back above 1350. But at the moment we're around 1337. So I've got a chart of the FTSE here. We were focusing on the FTSE quite a bit. It is, after all, our most popular market. But here you can clearly see that ever since this rally commenced, there is still the uptrend is very much intact. This rally commenced back in 2009. But does that trend line mean that there could possibly be a retracement to around the 5,500 area? That's where the long-term upward trend line is at the moment. But obviously, if you focus in a little bit more since the rally that's commenced in July, again, earlier this week, we bounced off that 5,800 level. So we're still very much in an upward trend. So resistance for the market is, of course, this year's high. And that's a key focal point for the bulls, 60.90. And then beyond there, really, there isn't possibly all that much until around 63.50 over the longer term. Down to the downside, 59.20 near term is support, and of course 5,800 is key. And then below there, bulls will hope that 55.20, if we get there, will hold up the market. So how are clients trading at the moment? Well, they're short the FTSE. In fact, they're short pretty much every index that we quote almost. But they are in particular short FTSE, short DAX, and short the American indices. So countering this trend, expecting lower prices, we've come a long way so far. And in terms of currencies, they're long the dollar on the whole. They have been short euro dollar, but this little retracement that euro dollar has seen, clients have done quite well out of that, and they've continually bucked the trend for euro dollar. But this little retracement, they've taken some profit and now roughly flat. Gold, as ever, long gold, no surprises there. But interestingly, when looking at the crude markets, Brent crude has rallied a lot more than NYMEX crude, and clients are shorting Brent but buying NYMEX. So playing the crack spread slightly there, but also maybe a little bit of hedging, expecting NYMEX to catch up with Brent. For the rest of the week, we've got obviously one day's trading left. We've got the key non-farm payroll tomorrow, so that will be focused very closely on. And again, that number is expected to rise from 103,000 last month to around 130 is what the market is expecting at the moment. And don't be surprised if that figure comes in a little bit stronger. It could be possibly better than that. Today we saw initial jobless claims, the weekly initial jobless claims come in a little bit better than expected. And of course on Wednesday we saw the ADP private payrolls surprise to the upside. So we could possibly see non-farms do a little bit better than market expectations. The theme of this week, well, it has to be the Middle East. It's driven oil prices. Brent's back above $100. NYMEX is not far behind, back above $90. And really the concern that brings to the markets is any contagion. Will the unrest, will it go across the borders? Will it affect other countries such as Jordan, such as Saudi Arabia? And could that drive oil prices higher? We're still not seeing any settlement to Egypt at the moment. There are still people on the streets of Cairo, and it is a little bit unnerving. So that's why we're seeing markets just perhaps pulling back a little bit at the moment. So we'll have to see how that pans out. With any luck, it will resolve itself. As ever, do give us feedback, media@capitalspreads.com.